Now, even though I absolutely hate to share this with you guys, so far in 2025, it looks like there's a ton of different corporations, different companies laying off employees like crazy, which again, I hate to see. But again, I guess it's just sort of the reality, and knowing that your 9 to 5 job, although maybe it's secure, it's of course not promised. Now, because that's the truth, and the fact that active income or your 9 to 5 job is 100% not promised, not guaranteed, and this is especially reminded to us when we do see layoffs like we have recently across the country, it's just a good reminder once again, and one of the main reasons I personally started building a passive income portfolio several years ago. And this wasn't because I necessarily was worried about getting laid off or losing my active income completely, but just knowing that you're building out a passive income generating machine, maybe alongside your active income, definitely has helped me sleep better at night over the years, and is exactly why I think every single person out there, especially someone out there working a 9 to 5, should be building a passive income machine that can pay their bills or at least help out with things like that if of course your 9 to 5 or active income dries up. Now for me personally, across all my portfolios, I'm currently earning on average around $7,800 per month, more or less in dividends. And this as of right now can completely pay all my expenses and then some. Now in this video, I'm going to share with you guys several different cash flow and ETFs that are all relatively high yield, which means these ETFs could be perfect to use to build an income producing portfolio like the one that you can see right here on the screen. Now again, I'm not saying that you need to build a portfolio to cover all your bills, all your expenses, and retire on some beach somewhere, but building a passive income generating portfolio that can help out, pay maybe a bill here or there, can definitely be ideal, especially during times like we're going through as of right now. So if you want to see which ETFs I think could be perfect to help build out a passive income portfolio, to maybe pay for a bill or two or maybe all of them, make sure to stick around, drop a like down below, and let's get right into it. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey. And my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. Now, one thing's for certain, when building a portfolio that's going to pay you sustainable passive income, you're definitely not going to want to buy into names that are going to decay over time and basically make your portfolio lose value, like certain names that we've seen across the market over the last year or so. Now, instead, you want to buy different high quality ETFs that have a strategy which is going to withstand at least most market conditions and is going to have a stable NAV, but also offer consistent income from day one. Now, this brings me into the first ETF that I think would be a perfect passive income generating ETF that I personally own tons of across my portfolio as of right now. I'm talking about DIVO, the Amplify CWP Enhanced Dividend Income ETF, which basically buys a small basket of different individual stocks and then writes cover calls, offering a potential for around 5% distribution rate, which means you're going to earn a substantial amount of income even with a relatively small amount of money invested. Now, DIVO is awesome because it's low beta, meaning that even when the market turns red, DIVO doesn't necessarily budge all that much, at least again during normal market circumstances. But DIVO also has a high amount of income potential, like I said, because it's comprised of high quality dividend-oriented stocks, but along with that, the cover calls sort of supercharge it. But like I said, it's not all about income. You also want to buy into names that aren't going to decay over time, or as a bonus for an income producing portfolio that could maybe surpass your 9 to 5 sometime in the future. You want to have a portfolio that has a potential to grow too. Now, DIVO over the max time frame is up almost 70%, and this isn't even including all those dividends every single month. DIVO could be a great ETF to look into, especially in the context of building a cash flowing portfolio right from day one. Now, another ETF that could be perfect for what we're talking about in today's video is GPIX, the Goldman Sachs S&P 500 Core Premium Income ETF, which offers S&P 500, but then through the use of writing cover calls, offers a boatload of income potential from day one. Now, how much income potential are we talking? We're looking at somewhere around 8% yield with consistent payouts every single month, more or less, somewhere in the 32-cent range over the last year or so. Now, 32 cents more or less for every single share that you buy means that in theory, you're only going to need to collect so many shares of an ETF like this one in order for it to maybe cover a partial bit of a bill or maybe an entire bill altogether. Now, along with that 8%, GPIX, for example, is up around 28% also, so it's grown over time. It's paid income consistently every single month, which once again means it could be a perfect ETF to look into for the context of this video. Another perfect one to look into is GPIQ. This is the NASDAQ 100 version. Also, I like these two ETFs because they're linked to an index. The NASDAQ 100, although sort of volatile, it is pretty strong. It's done very well historically, and it offers a lot of volatility, which means the premium income potential is going to be juicy. This ETF does the same thing as GPIX, only uses the NASDAQ 100, and it offers around a 10% yield more or less, with around 40 cents more or less per share per month paid out, which again is a massive amount of income potential that an investor is going to have exposure to from day one. Again, with an ETF like this one that pays around 40 cents more or less per share, you're only going to need to collect, in theory, so many shares until it can maybe cover a portion of your cell phone bill, maybe your car insurance on a monthly basis, or whatever else the case might be. Now, GPIQ, just like the others, is up on the max time frame. No NAV decay here. It's up over 28%. Another few great ETFs to look into if you're looking to build an income producing portfolio that's safe, that's going to be sturdy during most market conditions, is JEPQ, one of my favorites, the JP Morgan NASDAQ Equity Premium Income ETF. We've talked about JEPQ so much on the channel. It has around a 10% yield more or less again, so you're going to be able to earn a lot of income potential from day one. But also JEPQ in the max time frame is up in the green, up around 17%. No NAV decay here, nothing even close. In fact, a lot of investors, including myself, are up substantially on our shares of JEPQ that we bought a while back. Another one to look into if you do want to build up a portfolio that's going to pay you somewhere around 40 cents per share, more or less per month, and can definitely help you pay your bills in the future. Now, another ETF that could potentially solve all this and more is JEPI, the JP Morgan Equity Premium Income ETF. JEPI is a little bit lower yield, somewhere around a 7 or 8% range, but still has offered consistent income more or less over the years and has also grown over time. JEPI on the max time frame is up around 18% also, so again, no NAV decay here. This ETF has grown its paid income consistently, which I've loved over the last several years as a shareholder. So again, those are just a few ETFs that could potentially solve the problem of paying your bills on a monthly basis without offering a massive exposure to risk, NAV decay, or anything else a lot of the other higher yielding ETFs offer. Now, I know there's lots of ETFs across the market that yield much more than say 5, 10, 15, 20%, but again, every ETF is going to have some trade-offs, maybe a little bit higher risk versus reward, or whatever the case might be. Now, all that to say that I personally own several different ETFs, as you can see across the market, and different stocks that offer their own degree of risk, their own degree of upside and income, etc., etc. But one thing's for certain, building a long-term portfolio that's going to pay a significant amount of cash flow to you on a monthly and yearly basis is something that I personally think is going to be beneficial. And especially as I'm hearing about all these layoffs, I just thought it'd be a good time to make a video and remind everyone how important a passive income portfolio could potentially be. So now that we went over several different ETFs that could potentially help you build out a passive income portfolio, even relatively safely, I lastly, most importantly, want to hear from you guys down below. As far as an income-oriented investment, what's your number one favorite across the market as of right now? Drop the ticker symbol in my comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.